This is Office Hours at Duke University. Today's conversation is with Professor Timur Kuran. He's going to be talking about economic development in the Islamic world. Everyone watching is invited to join this conversation. To do that, send an email to live@duke.edu, tweet your question with the tag Duke Live, or post a comment on the Duke University Facebook page. I'm James Todd with Duke's News Office, and Professor Kuran, we're here at your online office hours session.
Thank you for inviting me.
All right, so let me just tell everyone a few things about you. You are the author of Islam and Mammon, The Economic Predicaments of Islamism, as well as the forthcoming book, The Long Divergence, How Islamic Law Held Back the Middle East. And you're a professor of economics and political science here at Duke, as well as the Gorder Family Professor of Islamic Studies. So as we talk about Islam and economics, there's a popular notion that jumps to mind that says the problem is that Islam doesn't allow you to make loans to charge interest. But you're saying that's not exactly the whole story, how things really work.
Yes, many people attribute the underdevelopment of the Middle East to the Islamic ban on interest. Now, it's true that throughout history, many Muslims have interpreted the Quran as banning all forms of interest. But from the very beginning of Islam, and Islam goes back 14 centuries, most Muslims who have operated in credit markets have circumvented this ban. They've given and taken interest in a thinly disguised form. For example, the lender provides, along with the funds that he's lending, a piece of cloth, and he charges for that piece of cloth. What he's charging is, of course, to any economist, interest. This went on for many centuries, and Islamic courts that in principle were enforcing this ban on interest looked the other way. Given that interest was given and taken freely in the Middle Ages and in the early modern period, this cannot be the reason why the Middle East became underdeveloped. If credit markets played any role, it is that credit markets in the Middle East and the rest of the Islamic world were atomistic. Lenders typically were individuals or small partnerships, and borrowers were individuals. We do not see until very late, until the early 20th century, banks. That is the problem of the Middle East did not generate from within the institution that we now call a bank.
Now, there is this whole Islamic banking movement. A recent Wall Street Journal article cited an estimate of $1 trillion of assets, but you're skeptical that there is a really authentic Islamic banking. Why is that?
The very concept of an Islamic bank goes back to the 1940s. Before that, the term did not exist. The concept of an Islamic bank emerged in the context of movement in British India for Muslims to have a homeland of their own, the homeland that ultimately became Pakistan. The leaders of this movement needed to prove that Muslims lived sufficiently differently in a wide variety of contexts, including economics, to justify a homeland of their own. Terms such as the Islamic Constitution, Islamic way of life, Islamic banking, Islamic economics all emerged in the context of this movement. Now, for 30 years or so, no Islamic banks were created. It just remained a concept, an ideal. Mm-hmm. The concept was put into practice in the 1970s during the Arab oil boom, because some of the oil-rich Arab monarchies were looking for ways to legitimize themselves, and supporting the nascent Islamic banking sector was one of them. Now, after the sector emerged in the 1970s, it took on a life of its own, and it has become a very successful sector. As you say, about $1 trillion in assets these banks have. That is a huge number, and they are growing very rapidly. They grew 29% last year.
Okay, but there's still this differential of there's a lower per capita income in the Muslim world
Yeah.
than in the West, and you're saying that's not because of some long-standing practice against interest. So what accounts for that if the Middle East was in the Middle Ages a big trading hub?
Yes, if we go back to the year 1000, we see that Europe, the Middle East, is economically as successful as Europe. And if we look at the types of institutions that people are using to conduct financial transactions, to conduct trade, there are not many differences. By the time we get to the 19th century, we see massive differences. What are the fundamental differences? In the West, which is by then the economically advanced part of the world, people are able to pool labor and capital on a very large scale.
Okay.
They are able to form large companies that are capable of exploiting the modern technologies, the technologies of the Industrial Revolution. In the Middle East, this was not possible. Why was it not possible? Because the only organizational forms available were ones that allowed people to pool resources on a very small scale. 5, 6, at most 7 people would come together to pool capital for a very short period of time. Well, you can't operate efficiently in a modern industry, in mass manufacturing or in mass transportation or in modern finance with that type of arrangement. This is why the Middle East was behind Western Europe economically in the 19th century.
And part of your argument is that it's not necessarily a question of technology that the steam engine wasn't invented in the Middle East, but the institutional capability that you're talking about. So why is that? Why is sort of contract law and institutions even more important?
Yeah. In the 19th century, it was possible to import a steam engine, which was not invented in the Middle East. It was possible to import it from London, let's say, to the Middle East, and if you didn't know how to operate it, you could bring the technicians to do it for you. What was lacking and what could not be transplanted so easily were the institutions that were necessary to operate in industries that use steam engines. And what are those institutions? Well, the corporation, joint stock companies, stock markets, standardized accounting, these are all institutions and business practices that emerged in Europe during the preceding 1,000 years. During those 1,000 years, during the second millennium, these did not emerge in the Middle East. They had to be transplanted to the Middle East. Reforms started in the 1850s. They continued in the early 20th century. The first corporations in the Middle East, indigenous corporations, were founded in the 20th century. The first modern banks that were funded and owned by indigenous peoples came in the late 19th century and early 20th century. And in a sense, we're still living through a process of adjustment.
And it's not that the Islamic world was without economic institutions. You write about this contract, the waqf, something that we might call a nonprofit, but it's not really. I think there's an interesting story here about its help and hindrance in economic development.
Yes. In the Middle East, business was conducted under Islamic law. And Islamic law provided some institutions that were very well adapted to the economies of the Middle Ages. You mentioned the waqf. I'd like to bring in one other that I think is relevant, and that is the partnership. Islamic law allows people to pool labor and capital for commercial ventures. And for the Middle Ages, the contractual forms that it made available were quite sophisticated. There was nothing in the year 1000, even 1100, there was nothing more sophisticated in uh, in Europe. Now, fast forward into the 19th century, we see that people are still using those same partnerships to do business in the 19th century. So a big puzzle here is why those partnerships have not given rise to more sophisticated organizational forms. This is something that did happen in Europe. Europe in the year 1000, 1100 was pooling resources of simple partnerships, whereas when we fast forward a few centuries, we see that they're pooling resources in publicly traded corporations. Hundreds, eventually thousands of people by the 17th century are investing in organizations that are long-lived and that can outlive their founders and shareholders. So what happened in the Middle East, and then we can come to the waqf if you want, because it will be related. What happened in the Middle East to prevent the emergence of modern organizational forms? Why did these modern organizational forms, like the corporation, like the joint stock company, why did they have to be transplanted to the Middle East in the 20th century? Why did they have to be borrowed from the West?
And what's your answer?
Yes. And the critical institution is the Islamic inheritance system.
Okay.
Europe has a very different, in the Middle Ages, a very different inheritance system, and that is what made a major difference. The Islamic inheritance system is highly egalitarian. It is spelled out in the Quran. Every child has to be given a share of an estate. It is not possible to disinherit a son or a daughter. Now, a daughter gets half the share of a son, but is entitled to a share, and if she's not given that, she can go to court, and the court will enforce it. Any surviving spouse or spouses under Islamic law, wealthy people could have multiple wives. They were entitled to shares. Now, why did this matter? It was a very egalitarian system, and people have praised the Islamic inheritance system for this reason. But it had a downside. The downside is that it fragmented successful businesses. Successful businesses could not be passed on from one generation to the next, or could be passed on with great difficulty. A successful businessman who died very wealthy, in charge of a business empire, typically had, precisely because he was wealthy, he had many sons and daughters. Right. Precisely because he was wealthy, he had multiple wives, often many children from the second, third, fourth wife, which meant that his wealth got fragmented a great deal. In theory, one could put this together, but it was one could put it together after the assets had been split up. One could put them together, but it was very difficult. Some people inevitably wanted to go their own way, and that's why we find no examples in Middle Eastern history of dynasties, commercial dynasties, where the son continues, builds on what the business that the son, that the father had put together. Now, this is one reason why large businesses did not emerge. The second is, and this is more critical, okay, because the inheritance system fragmented wealth, people had a disincentive to form large companies, because form large partnerships. If you and I form a partnership with 20 other people, chances are, and we expect it to last for a year, chances are that one person is going to get incapacitated, one person is going to die. If we keep the partnership very small and short-lived, then it's the chances of having to deal with the heirs of a person and facing this fragmentation, which can be very costly, is very low. So the punchline here is that people kept these partnerships very small. Small partnerships did not generate the coordination and communication problems that required Middle Easterners to develop more sophisticated organizations. And just to finish this part of the story, I know I've gone on for quite a bit. To finish this part of the story, in Europe, the inheritance system was not tied to the Bible. The Bible does not specify an inheritance system. There's a bewildering variety of inheritance systems, and one of them matters to us, and that is primogeniture. Under primogeniture, the estate goes to the oldest son. This is highly inegalitarian, very unfair to the second son, very unfair to the third son, certainly unfair to the daughters who are married off and don't get any share of the business. But it has one advantage, and that is that a successful business can be passed on to the older son. When it's passed on to the older son then adds to that. As the business grows, you start getting communication and coordination problems that require you to develop standardized accounting, stock markets, and so on. And that's the story of the rise of the West.
Of the West.
Yes.
Good.
Yes.
We haven't done waqf, but let's get back to that.
We'll get back to that,
yeah,
because we can tie that to this. Yeah.
That'll be in there. Yeah. We've got an email question that's come in along the lines of
Yes.
The limits of Muslim economic institutions and reform.
Yes.
And it comes from Aaron. A reminder to everybody watching can also send in a question. To do that, email it to live@duke.edu. You can tweet your question with the tag Duke Live or post it on the Duke University Facebook page. So, Professor Kuran, this question comes from Erin. She's a freshman here, and she says, what can the non-Muslim world do to help develop the Muslim world without seeming intrusive, insensitive, or imperialistic?
Okay, that's a good question. I think that what the rest of the world can do, if it wants to help, is to assist the private sectors of the countries in the Middle East and the rest of the Islamic world rather than the government. The problem of the Middle East today, the central problem, is that it has a weak middle classes and weak civil societies. A weak middle class and weak civil societies means that you don't have the checks and balances that are essential to a democratic system. Democracies, when formed, are weak because you don't have a strong civil society that will prevent autocratic tendencies and prevent arbitrary government. Now, I might point out here that this is related to this weakness of the Middle East is related to the history that I started to describe a little while ago, the fact that its businesses remained atomistic and it was unable to form large companies until very late. This is the reason why the Middle East and the rest of the Islamic world tends to have weak private economic sectors and weak civil societies. That is where our energies should go, not helping the governments and certainly not providing military aid.
Gotcha. Now, in talking about civil society in the Muslim world, we were about to talk about the waqf, which is a civil society institution, something like what we think of as a nonprofit, but not really, and a lot older. So what's its story?
Exactly. The waqf is a very important Islamic institution. First of all, what is it?
Yes.
It's a trust.
Okay.
It's a trust that is formed under Islamic law, as with a trust, a modern trust in the United States. A person who owns some assets endows those assets to provide a specific a designated service. In the case of the waqf, it has to be in perpetuity. It does not have to be a religious service. It could be a mosque that you endow. You set aside some assets whose income in perpetuity will support the mosque, pay the salaries of the employees, pay for the upkeep of the mosque, and so on. But it doesn't have to be. The service can be anything that is allowed under Islamic law. So The vast majority of schools from the Middle Ages onward in the Middle East were established as waqfs. The vast majority of water fountains were established through waqfs. There was some income, some assets that allowed it to operate. Now, these are all services, schools, I should have mentioned colleges that were also supported through waqfs in the Middle East. These are all services that in the West, in the Middle Ages, and in almost any modern country, including those of the Middle East, are provided through corporations.
Okay.
What's the difference between a corporation and a waqf? A corporation has a legal personhood, and it is self-governing. The trustee, the owners of a trustee, the owners of a corporation, the people who make decisions on its behalf, can decide as conditions change to allocate resources differently. In the case of the waqf, the resources have to be used as the founder specified in the waqf deed. So if the founder set up an inn for merchants on the Silk Road, for merchants to stay with their caravans for free. There were many such inns, caravanserais established. If the transit trade dies up, he's not free. The trustee, several hundred years later, is not free to take those resources and put it into something else.
Okay.
This means that over time, especially as conditions start changing very rapidly, as they do starting in the 18th century, a lot of waqfs are going to become dysfunctional. And this is a problem that occurred. This is another source of underdevelopment in the Middle East. The corporation, which Western Europe used, was much more flexible than the waqf. It allowed resources to be reallocated as conditions changed, as new technologies emerged. This was not possible in the Middle East through the waqf. I should point out that Islamic law does not have a concept of a corporation. The first law of corporations in the Middle East came came around 1906.
Yeah. Recent. Okay.
Yeah. It's very recent.
Good. There's a lot more to talk about with the history
Yes.
here, but I'm curious about your own personal investment, if you will, in this topic. There's an interesting story. You grew up in Turkey, a predominantly Muslim country
Yes.
with a secular government.
Yes.
You came to school in the U.S., but it was, in a way, happenstance that you actually combined economics that you were studying with the Islamic world. What's that story about, how you happened on this
Well,
whole
it
subject?
has to do with the fact that I grew up in Turkey, and with the fact that you just mentioned that Turkey is a secular country. In fact, Turkey, when I was growing up, was militantly secular in that religion and politics, religion and economics just were not supposed to mix. Why? Well, people often said that Islam was a source of the problems that Turkey was facing, that the region was facing, but they wouldn't say exactly what the problem was. And I wondered, as a child growing up there, what the problem had been, but the issue wasn't discussed. I didn't take up the issue as an undergraduate studying economics or as a PhD student studying economics because in economics departments in those days, economics and religion did not mix. But this question was always in the back of my mind, and I got into it really by chance when I saw, wandering in the library at Stanford University, some books with titles like Islam and Capitalism, Islam and Development. I just wondered what the connection was. After all, for many years I'd been wondering myself. I read these books. I found that they were, the logic was quite weak, and I decided to write a critique. This was a sideshow for me. I had another research agenda. The paper got published in 1983, and I thought that was the end of it. Well, it turns out that there were many people who were beginning to wonder whether there was a connection between the economic performance of the Middle East and the religion of Islam. And I started getting contacted. And I would tell people, I'm not an expert in this field. All I've done is just write one paper. And they've said that's one more than anybody else. Any other economist with a good training has written. So to cut a long story short, I started getting invited to conferences to present papers, to speak on topics. Well, if I was going to speak on topics, I had to first learn about a topic myself to say something intelligent, and that the rest is history. The rest is the books that you mentioned in introducing me.
And so what about people that say, as you were brought up with, hey, you know, religion and economics, they just don't go together. Those are two separate spheres, and what are you doing trying to mix them? Even in your study of them.
Right now, I am using the tools of economics, of modern economics, to understand why the Middle East became underdeveloped. And those tools allow me to understand the incentives that various institutions create, the opportunities that they generate, the opportunities that they block. And this has enabled me, this type of approach has enabled me to figure out, I think, why it is that starting from similar but not entirely identical institutions in the Middle Ages, the Middle East and the West set themselves on diverging paths.
Okay. So in talking about how things are actually going today, we've got another question here. Aaron has got a follow-up question, and everyone watching can also ask a question. To do that, you send an email to live@duke.edu. You can tweet your question with the tag Duke Live or post it on the Duke University Facebook page. So Erin brings up the example of Dubai. She said, where does it fit in? There's the tallest building in the world is in Dubai, and yet this emirate almost went into bankruptcy recently.
So the simple story about Dubai is that it spent beyond its means under the assumption that its property was becoming more and more valuable, and that demand for its properties would grow indefinitely. When the global crisis hit, Dubai was affected as well, and having borrowed a great deal, it finds itself now facing difficulties paying it. It's not a unique story. Greece is facing the same problem in our own country. California is facing a similar problem.
Right, but now Dubai, isn't it at least ostensibly operating under this Islamic finance rubric? I mean, how can you be borrowing and be buried in debt, but not accepting interest?
Some of its borrowing was at interest. So that part of it is easy to understand, because you have borrowed a certain amount of money, promising to pay 5%, 6% a year, and if your economy is not growing, if you've had a property bubble and property values are falling, it's easy to see how you would have difficulty paying back that debt. But as you point out, Dubai is also a center for Islamic finance, and some of Dubai's own borrowing was Islamic borrowing.
Okay.
Now, what is the difference?
Yes.
Well, in principle, Dubai was issuing not bonds, which are interest-based, but what are called sukuk.
What's that?
Islamic bonds. And these work on a different basis. Dubai transfers, as the borrower, transfers ownership of an asset in Dubai to, let us say, Barclays Bank, the lender. and immediately rents back that property from Barclays Bank and pays Barclays Bank a rent, not an interest payment, but every year it pays a rent. And at the end of the contract period, it pays back what it borrowed from Barclays Bank and gets back the asset. Now, the rent is equivalent to interest.
To interest, right, okay.
And it's widely understood by both sides that, in fact, the rent is not going to change. Now, under the principles of Islamic finance, if the borrower, or when the borrower runs into difficulty paying back, the two sides are supposed to share the burden. But that's not happening. If Dubai were actually abiding by Islamic principles, then some of its burden, some of its misfortune would be shared by its borrowers. So this is part of the story. A third part of the story is that people don't want to lend to a country where property values are falling if the collateral is going to be property in that country. So they were quite willing to lend to Dubai when and accept property as collateral, at least legally.
Right.
Even if the understanding was different, they were quite willing to do that as long as property values were rising. But with falling property values, they're not as willing, unless the interest rate is higher. And of course, that means a greater financial burden for Dubai that is greatly indebted and that needs to service the debt. This is, again, the problem that Greece is facing today. It's given the possibility of a bankruptcy, people are willing to lend to Greece only at higher interest rates.
Right, so it sounds like in there you're saying that these Islamic bonds aren't that Islamic after all. I mean, there's a Reuters headline here from this week, Islamic finance industry launches derivative standard. I mean, an Islamic derivative.
Yeah.
What's your critique of this idea that you have an Islamic bond and an Islamic derivative, but then when Dubai gets in trouble, then suddenly the creditors want their money, same with any other bond?
Well, there are many of the thinkers behind Islamic banking, many of the people who have been making the rules, are themselves not happy the way the industry is actually operating.
Okay.
They would like to see genuine profit and loss sharing. They would like to see a genuine sharing of risks, and that is not happening. And one reason it's not happening is that you cannot find as many willing lenders if they're going to have to take bigger risks in a part of the world that is politically not very stable. And it is cheaper to borrow if you promise a fixed rate. So
Right.
it's not convenient to do Islamic banking. And if you enforce the rules of Islamic banking, there would be far less borrowing.
I got you. Professor Kuran, we've got another email question. This one comes from Stuart. And a reminder that everyone watching can ask a question of Professor Kuran, and you do that by sending an email to live@duke.edu. You can tweet your question with the tag Duke Live or post it on the Duke University Facebook page. So Stuart asks, from your perspective and studies, do you believe the United States, in its concern about terrorism, should focus more on development assistance than on military support in the Middle East?
Well, in the short run, if we are facing certain dangers coming from the Middle East, we have to deal with them in the short run. Addressing long-term problems will leave us exposed to those problems if we don't deal with them. So I wouldn't go so far as to say that we should completely disarm and that we should not respond to terrorism, or that we should not protect ourselves against terrorism that is directed at the United States. By the same token, the Middle East is going to continue to be a problem for the United States and a source of terrorism until it becomes, it solves its economic problems and adapts to the global economy. So for that, we need a long-term strategy, and the long-term strategy must focus at some level on building the private sectors, making the countries of the region attractive for investment, reducing levels of corruption, strengthening the courts. If we put resources into these objectives, we're not going to get results immediately, but it's the only way out as far as I can tell. I don't see any quick fix.
Right now in Islam and Mammon, you open actually with the September 11th and saying that the economic story here is not strictly one of, there's poverty and frustration in the Middle East. What's the other argument that you're making here about this idea of Islamic finance and how that plays into a cultural, you call it Islamism?
Well, Islamists have been promoting the notion that there is a distinctly Islamic way of life. This goes back to the 1940s. And that the differences between genuine Muslims, properly, or I should say Muslims who are living according to Islamic law, according to Islamic principles, cut all across the board. In every area of life, Muslims operate differently. They need, therefore, to have concrete examples of differences. In economics, Islamic banking and Islamic finance is something that they have latched onto to show that there is a major difference between Muslims on the one hand and others on the other hand. And one of the arguments I make in the book is that in fact, Islamic banking is not very different from conventional banking. It operates, for the most part, on the basis of interest. There's very little profit and loss sharing, which the charters of the Islamic banks require them to do.
Right. I guess now, we've mostly been talking in terms of ways that the Islamic world needs to catch up to the West economically and in its finance industry. Of course, there was just a big financial meltdown in the West. So is there any legitimate critique from the Islamic world about how assumptions about finance that, maybe GDP is not the best measure of a well-being of a people? Is there any Islamic critique that you give credence to?
Well, they're legitimate criticisms of the use of derivatives. We didn't really know. We started using them, and they became very popular, and huge amounts of assets flowed into the derivative sector before we really knew how to price these. And before we knew who really was carrying the risk. Now, this is a critique that Islamists have made, and they've argued that these markets should have been regulated better, that they should have been more transparent. I agree with that. And this is something that others have said. One doesn't have to be an Islamic economist to agree with that. The story of the problem of we faced here with derivatives is actually not a new one. Throughout history, when new markets have been established, it's taken a while for us to understand who is carrying the risk. When the initial stock markets were established, there were massive bubbles that ended up in huge crises. People really didn't know who was carrying the risks. People did not know exactly what they were buying, what sort of risks they were taking when they bought the equity. We now have much more experience with ordinary stock markets, but derivatives are new. Eventually, we will learn how to price these, and therefore to avoid crises of the kind that we are in right now.
I got you. We've got another question that's come in by email talking about today's economy, and it says, what specific benefits would the U.S. gain if the Muslim world was more economically developed?
We would be able to trade more, for one thing, with the region. Their gain, the Middle East gain, is not necessarily our loss. If the Middle East is more prosperous, it will demand more goods from the rest of the world. That will create more jobs in the United States. So it'll be a win-win development.
And something you mentioned before when we were talking is that right now there's a big part of the economy in the Muslim world is not being tapped because people don't bank. That's so basic to our economy.
That is correct. In the United States, 95% of all households has a bank account. In the Middle East, the figure is 14%. And it's the same figure for the rest of the Islamic world. That is a tiny figure. It means 86% of all households do not have a bank account. The Islamic banking sector is growing very rapidly, despite some problems that it is experiencing. In the last year, it grew by its assets grew by 29%. That's a huge number, given that we're in a global recession. Why is the figure so high? Because banking in general is spreading. Conventional banking is also spreading. The Islamic banks, which are a minority of all of the banks in the Islamic world, are attracting some of the new demand for banking. As more and more households decide to place their savings in banks, some of them are opting for Islamic banks.
Gotcha.
Why are they choosing Islamic banks rather than conventional banks? There are a variety of reasons. In some cases, they're very conservative. They believe that Islamic banks are operating on an interest-free basis, and they believe that interest is sinful. So that's one reason for why some people are opening up bank accounts in Islamic banks. Others accept the criticism that the Islamic banks are not really doing interest-free business, but they feel it's a matter of degree. They're learning right now. At least they're trying, whereas conventional banks are not even trying. In addition, Islamic banks provide assistance to Islamic causes. Conventional banks are more likely to provide assistance to museums, to other non-religious activities. So for that reason, they open accounts in Islamic banks. And then there are people who do it simply to diversify. There are companies that have numerous accounts. And just to minimize risk, given that any bank, there's a chance of failure, they hold some of their assets in an Islamic bank.
Right. And so are there examples out there of economic reforms that are working? I mean, you're from Turkey.
Yes.
That's a country that's predominantly Muslim, that's secularized,
country,
right?
Yeah.
And so is that the right model? Are there other examples?
Well, Turkey is a secular country that does allow Islamic banks to operate.
Okay.
And there is a rapidly growing Islamic banking sector, and it is actually like the Islamic banking sectors in the rest of the Islamic world. It's actually quite useful. It's bringing more people into the banking sector, and this is quite useful. The difference between Turkey and some other countries is that in Turkey, people are free to form conventional banks or Islamic banks. Most of the banks are conventional. They openly give and take interest. A minority of the banks are Islamic. Same applies to Malaysia. You have conventional banks and Islamic banks. There are other countries that have required by law all banks to be Islamic. Pakistan is a good example.
Okay.
There people don't have a choice.
Okay.
And that can be a source of inefficiency if the banks operate as their charters require them to. Now, in Pakistan, it so happens that the vast majority of the Islamic banks operate like conventional banks.
Okay.
If they all tried to operate like Islamic banks, many people would pull their assets out of banks. But that's not the case.
I got you. So in pulling these strands together,
Yes.
we've covered 1,000 years of history.
Yes.
And we've gone across the whole Muslim world here, and you've mentioned the rise of just banking in general among Muslims. So is there something? What about democracy? That gets mentioned too. Is if the issue here is institutional, is it really you're talking about political reform more than you're talking about economic reform?
Well, I think they're tied together.
Okay.
And
that?
I think that a democracy can be established, of course, at the stroke of a pen by creating new institutions, by creating a parliament, by decreeing that there are going to be elections. It won't be a stable democracy unless there's something to prevent rulers from becoming autocratic.
Okay.
In every system, including our own, there are rulers, there are statesmen who would like to
Stay in power.
stay in power and do things the way they want, pursue policies that they want, even if the people don't agree. In democracies, the reason, in stable democracies, the reason the political system is stable is not because you have democratic people in power. It's because statesmen, policymakers, presidents with autocratic tendencies just can't get their way. In the Middle East, there's very little to stand in the way, of a ruler who wants to stay in power against the wishes of the people.
Right.
And that goes back to a point I've made before, the civil society is weak. Why is the civil society weak? Well, for many centuries, the private organizations were organized as waqfs, which were not self-governing and could not participate in politics and therefore could not provide the checks and balances that are necessary for democratization and for keeping democracy stable. So the Middle East has, it's only very recently that groups in the Middle East and the rest of the Islamic world have been able to form private organizations, organizations that are not controlled by the state, that can actually stand up to the state. These such organizations do exist, but they're very few and they're generally weak. Fortunately, the trend is toward stronger civil societies. This is going to take time, though.
Right, okay. We're kind of on our hour here, but there's one more question, so if we could fit that in. And it comes from Victor, and he asks, It has been reported that Lebanon has skirted the worst of the economic crisis. Does Lebanon's success as a result of good banking policy and wise financial oversight provide a useful model for the region?
Lebanon did, until its civil war that started in 1975, provide a shining model for the region. It had a booming financial sector. It attracted capital from the rest of the Arab world, in fact, from beyond the Arab world. Now that Lebanon has, to a large extent, stabilized, that financial sector is growing again, and it's not what it was. And there are other financial centers that now in the region that compete with Beirut. There's Istanbul, of course. There's Dubai, but the signs in Lebanon are generally good.
Good. Professor Kuran, thank you for coming and doing these online office hours. And everyone watching that wants to follow the work of Professor Kuran, you can visit the Duke Economics website. That's econ.duke.edu. Next week on Office Hours, Dr. Amy Abernethy is going to be talking about caring for people with cancer. A recording of this Office Hours session will be available on the Duke On Demand website. That's ondemand.duke.edu. And to learn more about Duke, you visit duke.edu.